Hi guys, welcome to GoldenEye. Today we are doing a question of joint venture when separate set of books is maintained for joint venture. There are several accounts are opened under this method like joint venture account, joint bank account, personal account of co-venturers and others account. Let's start.
Question: Ram and Mohan entered into joint venture on 1st April 2016. They opened a joint banking account with a sum of rupees 70,000, out of which Ram contributed rupees 40,000 and Mohan contributed the balance. They agreed to share profit or losses in the ratio of 3:2 after providing for interest on capital at the rate 6% per annum. They purchased goods for rupees 60,000 in cash and sent to a New Delhi agent for sale. Freight and insurance amounted to rupees 3,800. All the goods were sold by the agent for rupees 1,05,000 and the agent remitted the amount after deducting his commission at the rate 10% and expenses rupees 1,650. Prepare necessary accounts in the books of joint venture, assuming that the final settlement was made on 1st August 2016.
Let's start the answer. Joint venture account, particulars, amount, particulars, amount. Joint venture account is a nominal account in nature. It takes the place of trading and profit and loss account. It is debited with the purchases, expenses and loss. It is credited with the sales, income and gains. When credit side of this account is more than the debit side, then it will reveal profit. When debit side of this account is more than the credit side, then it will reveal a loss. Ram and Mohan purchased goods for 60,000 rupees in cash. So entry will be joint venture account debit to joint bank account. So to joint bank 60,000 rupees purchases. To joint bank expenses of rupees 3,800. So this expense includes freight and insurance. So entry will be joint venture account debit to joint bank account 3,800 rupees. To Ram interest 800 rupees. How we get 800? Ram contributed 40,000 rupees in the business. So 40,000 rupees into 6% interest on capital and we have to calculate for 4 months. So 40,000 into 6 by 100 into 4 by 12. Then we get 800 rupees as a interest. So entry will be joint venture account debit to Ram interest. Next is to Mohan interest. Mohan contributed 30,000 rupees in the business. Rate of interest is 6% and we have to calculate for a period of 4 months. So 30,000 rupees into 4 by 12 into 6 by 100. Then we get 600 rupees as a interest. So joint venture account debit to Mohan account. To consignee account. So this include expenses plus commission. Commission at the rate 10% on sale. Sale value is 1,05,000 into 10%. Then we get 10,500 as a commission and 1,650 as a expenses. So total is 12,150. By consignee account 1,05,000. So here total of credit side item is more than the debit side. So there is a profit of rupees 27,650. So Ram and Mohan will share profit and losses in the ratio of 3:2. So Ram share will be 3 by 5 or Mohan share will be 2 by 5. So 27,650 into 3 by 5, then we get 16,590 as Ram share and Mohan share 27,650 into 2 by 5, then we get 11,060 rupees. Next is Ram account debit, credit, particulars, amount, particulars, amount. Ram contributed 40,000 rupees in the business. So entry will be joint bank account debit to Ram account by joint bank 40,000 rupees. And Ram will get interest on their capital at the rate 6%. So by joint venture 800 rupees. Interest at the rate 6% for a period of 4 months. So 40,000 rupees into 6 by 100 into 4 by 12. Then we get 800 rupees. Next is by joint venture account profit. So this profit is transferred from the joint venture account. 16,590. So total is 57,390. To joint bank account, this is balancing figure item 57,390. It means we have to pay to Ram. Total amount is 57,390. Next is Mohan account, debit, credit, particulars, amount. Mohan contributed rupees 3,000 in the business. In this case, entry will be joint bank account debit to Mohan account. So by joint bank rupees 30,000, and Mohan will get 6% interest on their capital. By joint venture rupees 600. 30,000 into 6 by 100 into 4 by 12, then we get 600 rupees. By joint venture account profit, so Mohan's share transferred from the joint venture account rupees 11,060 rupees. So total of credit side item is 41,660. To joint bank account 41,660. This is the balancing figure item. So 41,660 rupees we have to pay to Mohan. Next is joint bank account, debit, credit, particulars, amount. Ram and Mohan purchase goods of rupees 60,000 and paid in cash. So in this case, entry will be joint venture account debit to joint bank account. So by joint venture rupees 60,000. They also paid 3,800 rupees for insurance and freight charges. So in this case, entry will be joint venture account debit to joint bank account. So by joint venture account 3,800. They paid Ram's share of rupees 57,390. So next is by Mohan account. So they paid Mohan's shares of rupees 41,660 rupees. To Ram account 40,000. So Ram brings 40,000 rupees as a contribution in the business. To Mohan account rupees 30,000. Mohan also brings rupees 30,000 as a contribution in the business. So total of credit side item is 1,62,850. When we deduct total of debit side item from the credit side item, then balancing figure will be rupees 92,850. To consignee account 92,850. Next is consignee account, debit, credit, particulars, amount. Who is consignee in this question? Consignee is our agent who sold our goods worth rupees 1,05,000. So entry will be consignee account debit to joint venture rupees 1,05,000, and this is the expense of consignee. So entry will be joint venture account debit to consignee account. So by joint venture expenses of rupees 1,650, and we paid 10% commission on sale to agent. So sale value is 1,05,000. 10% commission of 1,05,000 is 10,500. So total expenses is 12,150. By joint bank account 92,850. On selling goods worth rupees 1,05,000, consignee deduct 12,150 as their expense and give us to remaining amount rupees 92,850. Now that this is done, if you have any doubt, then please let me know in the comment section. Thank you.